You're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine.
Do you think it looks like global liquidity has kind of been on this downward trend since 2021, and like you said, looked like it was going to turn up second half of last year, and then now the Fed seems to be hovering and all this sort of stuff. And Bitcoin's just gone higher. Like, do you think there's also been a slight breakdown of this as well? Like, obviously we had the ETFs come in, and now we've got the Trump trade coming in. Like, I know, so obviously there is this reductive kind of correlation to everything just being liquidity. But do you think also crypto can just go higher because it's found product market fit in AI and found political support and probably is going to find institutional support with a bunch of different ETFs? Like, do you think there's a case for that as well?
It normally decouples at this point in the cycle anyway, because it starts forward looking. Now, liquidity is actually financial conditions drive liquidity. And so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And, we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. People forget that. Like, the institutions here, it's amazing. Well, it has to be. If you want 100% rise, you need larger pools of capital now because it's a much bigger market. So, and over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's at kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year.
It feels like to me, the main thing that people are worried about is rates. Like, everyone's somehow fallen back in, like degenerated, like, oh my God, we're getting rate cuts. And this is the thing that's going to just like turbo send us, almost ignoring the fact that we've rallied a lot in the last 2 years because of other things, such as like the big AI boom, and just kind of like this new paradigm where we can have like higher rates and equity growth. So it's almost like everyone's just forgotten about that. We're like, oh no, we're going to have not only are we not going to have hikes, it's just fewer rate cuts in 2025. Like, forget, hikes, but people are freaking out as if there are going to be hikes, but really they're just going to be fewer rate cuts. So it seems very overblown to me, because when you take a step back, okay, maybe we have no rate cuts for 2025, maybe we just have fewer rate cuts. But even if rates stay where they are, like, it's very different to maybe the PTSD people have from 2 years ago when inflation hit 9%. And when it hit 9%, where was the base rate? Like 2.5% or something like that. Whereas right now, you're gonna have a base rate in the context of like 4 to 5% or 4.5 to 5, wherever it ends up settling. And inflation is like around 3. So it's just a very different, like,
inflation is the discounting mechanism, not rates.
Exactly. That's exactly, yeah. Exactly,
and so the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026.
Raoul Pal has once again stirred the waters. Through X, Raoul shared a tantalizing glimpse into what he dubs the banana zone, a term encapsulating the electrifying phases of market swings. Although details are sparse, Pal is hinting at Bitcoin's recent wild ride and the possibility of an imminent altcoin surge that has tongues wagging and keyboards clicking across the globe. Get ready, because the market may be ripe for something unprecedented. Welcome back to Investocracy Crypto.
The other big change that happens, I think Basel IV comes into play, not in the UK yet, but in Europe first. And Basel IV, as ever, is just another backhanded mechanism for the banks to be forced to own more bonds. The UK and the US come at the middle of the year. So there's a big demand from bonds that come from this structural change as well, which helps add liquidity into the system.
Yeah, the only thing that I've just been worrying about is just that this strong dollar normally breaks something. And this sounds like a very peaceful, right? Oh, yeah, we'll open a swap line with Japan, but I just don't know if something in the interim might freak out.
It's breaking China. That's what it's doing.
It is. It is. I guess it's already breaking a lot of things. I don't think the market can deal with the dollar being this high and bond yields at back towards 5% again. I mean, that just doesn't make sense to me, given the amount of debt that's all over the world.
And also, the two things he doesn't want is high rates, because he's a property guy, right? He understands he's a growth guy. So he doesn't want high rates and he doesn't want a higher dollar. So he comes in about a week's time. So the chances of this changing pretty fast. And again, I've gone through, I know Scott Besant. He was a Global Macro Investor subscriber. I've known him for a long time. He gets what has to happen here. There was a great interview with the new guys going in the Economic Council. He just talked about, we're going to need a Plaza Accord at some point if this continues. We have to lower the dollar. And Trump needs exports because you've got the trade deficit. So everybody has to get the dollar lower. And all he did last time in 2017 was right at the beginning. As soon as he came in, he said the dollar needs to weaken. He already said this week rates are too high.
How does he do that? Is it only these sort of swap lines? That's kind of the only way? Because there's a lot. Obviously, there's questions about this, like his ability to affect the Fed. He's obviously had
I don't think he can affect
relationships with other Fed chairs.
Don't think he can affect the Fed. We just got rid of the last hawk in the Fed, so I think the Fed will continue to cut rates, and that's okay. But really, it's down to the US injecting liquidity to weaken the dollar and jawboning it lower. Because if the Fed come in or the Treasury come in and say, we believe in the strength of the dollar, but it's too high for growth right now, whatever, that's enough to turn market participants nervous. And then all you need to do is inject liquidity through various mechanisms to force that to happen. Don't forget, we got a $700 billion drain of the TGA to come as well. We've just drained the reverse repo. So they're going to have to stop QT as soon as they finish the reverse repo, which will be by kind of Feb, maybe. So then you're ending QT, injecting liquidity from the TGA. They've already mentioned, who was it? I can't remember who it was. I think it was Powell at the last Fed meeting said, we don't want to have to tighten liquidity on the rebuild of the TGA. That was a signal everyone missed. He said, we understand draining the TGA is liquidity into the system, but we don't necessarily want to tighten again once we have to rebuild it. So that's telling me it's probably QE. Now, maybe it's not QE, maybe it's QE by a different name, but I think they all know the game.
Raoul Pal's banana zone is not just a catchy moniker, but a narrative of the crypto market's highs and lows that resonates with both novices and experts alike. Pal started the discourse with an engaging analogy, transforming esoteric trading charts into something a bit more appealing. As Bitcoin trails a winding path, much like the curvature of its namesake fruit, investors find themselves bracing for rapid shifts reminiscent of market behaviors in 2016 to 2017. As Pal describes, Phase 1 involved a lineup of dramatic price breakouts, morphing now into a consolidation phase. Think of it like taking a breather after attempting an uphill marathon. But by looking at the roadmap Pal lays out, we're apparently poised on the cusp of Banana Zone Phase 2, otherwise known as the Banana Singularity, which sounds less like the end of days and more like a dream altcoin rally.
What have we got here? We've got us over-extrapolating on the future of AI. The reality, because I spend a lot of time in AI world, is the reality is agents don't exist in AI yet. Right, so we don't have fucking agents. What we have is a bunch of macros and plus AI search and a chatbot. right? This is not agents. And to watch ThreadGuy and all these guys going, oh my God, this is the future of the world. They are so far behind where AI really is. The technology we're seeing in this token side is 2-year-old technology. So we are not anywhere close to what is about to happen in AI world in 2025, which is full autonomous agents. It'll blow everybody's minds. And it will not come to crypto first because, again, people are like, oh, there's so much money in crypto. 16 billion, that's a fucking funding round for OpenAI.
Yeah.
They have so much density of talent between Anthropic, OpenAI, Google, and Meta that it is laughable to compare us to that. So I think that the risk is here that we've hit peak attention because everyone was bored over December, and we've forced a narrative. The narrative over time will be like the metaverse, spot on. Like DeFi was, spot on, right? These narratives are right, but we're over extrapolating, which is why I think it's a mid curve. We're over extrapolating, kind of claiming that we've reached the holy grail within a bunch of degens. And I think Ovi's point, it's the same fucking people. It's exactly the same people who were pushing WIF 6 months ago. And so we're not doing anything different. I spend a lot of time with people like Andy Ellie and stuff like that, finding out really what's going on. What was interesting from him was getting a mimetic to leap from his model to the human conscious and become viral. Okay, that was very interesting. And so, you guys using an AI for Rec Guy may be nothing to do with, is it this some sort of agent that people can use? And more is, can it implant virality of mimetics? That's very powerful.
The rules of the game will shift when altcoins ride high, spreading optimism and perhaps a little bit of chaos as everything trends upwards before the next slump. What follows, according to our plotmaster Pal, is the concentration phase, or phase 3, where the standout players, perhaps those core winners, jump ahead to new heights. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Is what people are doing is training these bots to say, hey, I want to swap this to this to this and do yield farming. You show it, it then joins the database, and if other people use it, you kind of get paid for that. So it's basically just models. It's no different than the Pinecone models that are on TradingView for trading models and stuff like that. So that's the issue I've got, is it's still macros. Now, what you're talking about, Mando, is 100% right. Is that going to be these guys doing that? Or is that going to come from another group of people using whatever OpenAI release or whoever releases it? I don't know. So that's why I find it not so investable. Not that the theme isn't right. Of course it is. That nexus of AI and crypto is colossus. But it's like, are any of these guys doing that? Or are we just building Telegram chatbots?
As observant traders will note, Raoul Pal isn't merely playing the role of a market oracle. He's inviting you to consider the possibilities and inviting you to weigh your stake in the ride of a lifetime. Bitcoin's price tango currently splits between nostalgia and novelty, floating near $94,800 after recent bumps on a more recent, yet familiar path. With forecasts hinting at another breakout and altcoin season on the horizon, the cryptocurrency space teeters on yet another cusp of innovation and risk. Where do you stand in this electricity-laden marketplace? Are you ready to embrace the bananas and set foot into the wild, speculative feast that is the crypto ecosystem? Share your thoughts. Are you pulling a seat to the front row or watching from a cautious distance? And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.